Sup, welcome to Tobes Trades. Sorry for the lack of uploads lately. My new semester just started and I've been trying to settle in. I have been trading though, but I just haven't been making videos because videos, they take long to edit and make. But I wanted to jump in real quick today and talk about GameStop and explain everything that's happening behind GME, right? GameStunk. So, what's happening? It's a short squeeze and it's a fascinating event. This will be written down in history, right? So this is amazing. But first, let me talk about what happened. Overview. GameStop has been experiencing a short squeeze, a gamma squeeze actually. About 2 weeks ago, it was at $20, right? And then since then, it's jumped up all the way to $210. 1,000% increase in just 2 weeks. Why is this? Again, short squeeze. And let me explain what a short squeeze is. When shorts short a stock, they're betting that it goes down. They borrow the stock and then they will buy it back later when they cover. When they close their position, that's called covering. However, when there's massive amounts of buy volume and the price goes up, the shorts lose money, right? So for them, an equivalent for us is when a stock, if you're a bull and you're long, it's equivalent of a sharp drop, a bearish engulfing candle, right? If there's like a huge buy volume for one day and the price just jumps, for shorts, they're losing tons of money, right? So when they do that, and they can cover and buy back their stocks and close their position, right? So that would be the same as me and you who are bulls selling a stock after it drops. The same way the shorts, when they cover, when the stock goes up, right? So when they cover, they're buying the stock, which also increases demand for that stock, which also in turn increases the price for that stock. And that leads to more shorts covering. That's a short squeeze. And now what's a gamma squeeze? A gamma squeeze is the bare bones behind this operation, right? So this huge crowd of retail traders, I would like to call them genius retail traders because I'm a part of this community. Wall Street Bets on Reddit. Let's go. They've been looking at very, very heavily shorted stocks. And GameStop at one point was negative 140% short. So there's a lot of shorts. So when there is a short squeeze, it will be massive. It will squeeze all the way up because there's so many people short on it. Right? But how do you get the short squeeze going? Another thing is GameStop has low float. Its outstanding available shares to trade is relatively low. And what that means is that price movements will in turn be bigger, more volatile. And how do these retail traders, this community, drive up the price so much, like leads to a short squeeze, and that's caused by a gamma squeeze. So gamma squeeze involves options, right? The Greeks, theta, vega, gamma, etc. So basically, the retail traders, they buy far out of the money calls, right? So this in turn. So this is delta neutral. That means if the underlying, the share for GameStop does go up, their call options also go up, right? So it's delta delta positive. But the market makers, the people, institutions, hedge funds who sell these options, right? They're profiting from the bid and ask spread of the options. They're not really delta positive or delta negative on any option they sell. They're making money a different way. So as a result, their strategy is to become delta neutral. So for example, when someone does buy a call, right, that makes them delta negative. So so as a result, that they want to be delta neutral. So what do they do to sort out this imbalance? When they sell a call, they also buy the equivalent amount of shares, right? So this shares are also delta positive, right? So they go in the same direction. So to remain delta neutral, whenever the market makers, they sell a call, they buy the shares to hedge, right? To hedge the position. So what's happening is there's a huge amount of retail traders who are coming in and buying these far out of the money calls. So in turn, the market makers have to hedge the position, right? They want to remain delta neutral. So when they sell this call position, they're also buying shares, driving the price up further. And when this price up goes faster and faster, there's more people buying than shares, buying the calls, far out of the money calls, and then they have to buy the shares even more. So at least this leads to a positive feedback loop, right? So as the price goes up, more people buy the calls, and when more people buy the calls, the institutions, the market makers who are selling the calls have to buy more shares, which in turn drives the price up, which leads to more people buying calls. And it just keeps going, keeps going, keeps going, keeps going. And what else? It also causes a short squeeze. The shorts have to cover as well, right? So when there is a gamma squeeze upwards, the shorts are fucking peeing out of their pants. Citron, Melvin Capital, these two large funds are getting fucked in the ass right now, right? So they're covering. So when they're covering, they're buying the shares. Remember, when you cover, you buy the share back. So they're buying shares, and this is also leading to a dramatic short squeeze, all driven by retail traders who've been the punching bag of institutions for such a long time. They're finally fighting back. I love this. Been making tons of money trading the breakouts of GameStop intraday, also after hours as well. And as you can see, like, this is just a squeeze. After this is the battle, a squeeze, a battle, a squeeze, and now it's all the way up to 210. And what's happening? What's going to happen next? So supposedly, Melvin Capital, which is one of the largest hedge funds who are shorting this stock, shorting GME, and also a variety of other stocks that have also gone up recently, such as BBY, Bath and Beyond, also BlackBerry, and also AMC. Right, we also see, look at AMC plus 70% after hours. So basically, all of their short positions are getting short squeezed, so they're getting fucked. And they also ran out of funds that got a 2.5 billion bailout just today. Right, so they're making a 2.5 billion bet basically that they can defeat this short squeeze because they don't have to cover all their positions. Right, if the price, for example, does go down, when they do cover, they'll have to pay less to buy the shares back. But to do that, they need to cause a panic, an end to this short squeeze, right? So they're basically borrowed $2.5 billion. Is their last bet tomorrow, or the rest of this week, to cause a panic. You see these attacks basically on the 5-minute? These are all attempts to crash the stock price and lead to a panic. Let's look at an example. Well, let's look at an example, right? Let's look at Tilray. Here's a good example I remember trading. It was intraday. Was it this? I don't think so. Not this. We're getting close, guys. All right, here. So this was getting squeezed. You see this large bullish engulfing candle as like volume goes up and up and up. This was the intraday much smaller version of a short squeeze intraday for Tilray, the wheat stock, 420. Gotta love it. And then there was a short seller attack. Right, they just dumped all their shares, causing a panic, and then it did cause a sell-off, a minor sell-off. But what the Melvin Capital is trying to do with the 2.5 billion. Do I have to scroll this all the way back up? Man. All right, okay. So what Melvin Capital got with their 2.5 billion bailout is to try to cause one more short attack rest of this week. So hopefully the price will come crashing down around $40, right? That's the minimum. That's the base. I'm estimating because that's the previous consolidation range. So, but if they don't, they basically go bankrupt. They go zero. So they have to liquidate all of their assets, all of their collateral to cover their remaining short position. So knowing, we don't exactly know how much short position Melvin Capital and Citron have left. However, we do know that because of the 2.5 billion bailout they are getting, they still have a massive short position left, right? So they're basically betting everything on this 2.5 billion attempted crash from the short sellers. But if they don't, all the remaining large shorts are going to get covered. The brokerage is going to be liquidating their assets to buy back these shares, to buy back their shorts. And that's going to lead to further huge, massive short squeeze if Melvin Capital do go bankrupt. If we do survive the 2.5 billion attempted crash tomorrow or the rest of this week. So be on the lookout, guys. Always be agile. Don't be stuck to just, like one one chart, right? One time frame. So like, don't just trade daily. Just monitor the intradays, monitor the 5 minutes, the 1 minutes. If you're busy, do the hourly, But I suggest the 5 minute. It's the best if you're busy. Am I going to be monitoring this? I will try my best, but I have a lot of classes, so I might miss out on this opportunity. But I have alerts set, so even if I'm in class, I'm getting on the train. If Melvin Capital do go bankrupt, we could see this stock potentially go up to $400, $500, based on how much short position Melvin Capital and Citron have left. So this is an amazing event in history, guys. We're experiencing history. 2021 is already crazy. Holy moly! Oof! This is a few like. If you think about it, it's kind of crazy, like what's next? Like how our retail traders have so much power now. And if you're just GameStop, you're happily caught in the middle of this. You're like, you're just chilling here. My stock got $3. Oh man, no one likes me. But now, bam, 210. All because the short sellers, who I fucking hate, right, who GameStop hates, are getting wrecked. The GameStop is loving it right now. So anyway, that's it, guys. This video, pretty much to wrap it up, I explained to you what's happening with GME and why what's happening is a short squeeze and a gamma squeeze and what causes those. And what could happen in the future, no one fucking knows. Be agile. Look at the chart. If you're busy, look at the 5 minute, man. Just take a look at it every like 10, 20 minutes. Try to if it does break out of the 160, well, right now it's already at 210 after hours, depending on where it opens tomorrow. However, if you're just looking for some generic guidelines, whenever it opens tomorrow, it will not come crashing down directly. It will go for a retest. It will be a similar candle, worst case scenario, to 125 yesterday. Right? It gaps up open high, 210. However, maybe there's a small attempt to drag it down first 30 minutes, an hour, but eventually it will test an intraday high above the open. That's what, like 80% sure. So that could be a good strategy if you're experiencing if you've experienced doing these trades. I've definitely done these trades before, and I will be looking to do that tomorrow with a small position. Or you can just fuck it, buy GME. But don't. Always manage your risk. Always be agile. If it does come crashing down, predict profit the other way. Worst case, just sell. We're experiencing history, guys. Good luck. And remember to like, comment, subscribe. If you like more of these option videos too, I'm also very knowledgeable in options. In my main account, I mainly just do the wheel strategy. I sell cash. I sell covered calls and I write cash secure puts, which are very, very consistently profitable with very, very little risk, which is why I use it for my main account and not my day trading account, which is smaller. But anyways, if you want to learn more about the Greeks, right, the theta, vega, roll, gamma, delta, or just about strategies, option strategies like iron condors, reverse butterflies, etc. Stringles, let me know in the comments below. Thank you for watching and have a good day.